There is inflation. There's inflation in everything that you want to buy. It's just not tracked by the Fed. There's inflation in assets. There's inflation in bonds. There's inflation in stocks. There's inflation in real estate. There's inflation in gold. There's inflation in scarce art. There's inflation in everything scarce. The inflation measure that the central bank tracks is a market basket of consumer goods and services that do not include the highly volatile food and energy. By the way, they don't include food, energy, and assets. So you tell me, in what universe do you live in that you can live without food, energy, or assets? If you want to watch streaming Netflix or YouTube videos for the rest of your life, then there's no inflation. So what's going on right now is that the popular media, mainstream media, and the central banks, they're making a lot of noise about no inflation, and they're lamenting the lack of inflation, and that's the excuse to lower the interest rates and print money. But the point is, why in the world would you actually be concerned about the rate of inflation of a market basket of things you don't need? Right? The inflation rate that you should be concerned about is the inflation rate of food, energy, and assets. And if you were to take, say, the inflation rate of bonds, the 10-year bond was yielding 250 basis points about a year and a half ago, and then it was yielding 50 basis points, which means it went up from $2 million to $10 million in 12 months. So how is that not inflation? It's hyperinflation of assets. Inflation is a vector. It's not a scalar. It's not one number. I can calculate the inflation rate of assets, food, energy, and you can have any number you want between minus 10% and plus 30%, depending upon what you want to put in that basket. I think that the big challenge every investor, every person on earth has right now, all 7.8 billion people and all $300 trillion worth of investments, their big problem is, where's my store of value? And in a world where if I double the amount of currency, but I keep the assets and the goods and services constant, then that means everything has to go up by a factor of 2, right? So in a world where you're expanding the money supply, it's like expanding dropping the air pressure. As you go up in altitude, the air pressure is dropping, oxygen's falling out of solution, the heat is falling out of the air. You're going to freeze to death or suffocate. So everybody needs to find a store of value. And a lot of people are using Tesla as that store of value because they have more faith in Tesla stock and Tesla than they have faith in the federal government and the Federal Reserve and the central banks, because their view is, there's something I can count there. A lot of people are using Apple and Amazon as stores of value. There's 2 ideas that are new ideas that most people, 99% of the world doesn't understand, that I'm going to share with you. First idea, Bitcoin is rotating this year from the old insight narrative, which is it's an uncorrelated speculative asset traded by retail traders on offshore exchanges with leverage that's kind of cool. It's rotating to a new insight, which is it's the world's best long duration investment grade safe haven treasury asset. It's something you're gonna use to give money to your grandchildren. If you want to have money 30 years from now, 60 years from now, and you want to put your money in property that the state can't seize, no government, the government can't get at, it's not going to be taxed away like real estate, it's going to be there for 30 years, 40 years, then this is the ultimate long duration safe haven asset. That's a new idea because people that put money into that idea are just going to let it sit there for a decade. They're not traders, they're not speculators. So that rotation from speculative asset to safe haven asset is a big idea, because you go from 1% of the people betting 1% of their money to 100% of the people betting 50% of their money. Okay, big idea. Like there's $300 trillion worth of monetary energy sitting between bond stocks and real estate. Half of it just wants a store of value. So there's no reason why $150 trillion wouldn't flow into the Bitcoin network. And so we're not talking about demonetizing gold. We're talking about the people that stampeded to gold or S&P indexes or stock indexes or bond indexes. If you don't love, if you own Tesla, you love it. But there's a lot of people that buy stocks they don't love. They just put it in there because they don't want to lose their money. And so they will use Bitcoin as a savings account. It's like the savings and loan at the end of the universe, right? It's just a savings account. If Tesla puts $1 billion into Bitcoin, they'll double their money within 12 months. If they put $2 billion in, they would probably generate a $10 billion gain, right? By the way, anybody could do it. Like if you're a billionaire hedge fund guy, you put $1 billion into Bitcoin, just put it out on the wire and say you did it, because Bitcoin it's a dominant network that's unstoppable. Everybody needs it. Nobody can stop it, but very few people understand it. 99% of the investors don't understand it. But once they understand it, they've all got to stampede into it, and they're going to squeeze through it, and they're going to bid the price up. And so it creates this very virtuous cycle. You buy it, the price goes up. It gets more valuable. More people want it. There's more adoption. The price goes up. Now more companies, maybe a company can't buy 5 billion worth of it. They can only buy 1 billion worth of it. When it goes up again, a big insurance company buys 2 billion instead of 100 million. And then it goes up again because Bitcoin only exists to do one thing, which is to provide monetary liquidity. So therefore, the higher the price goes, the better it gets, right? Which is the opposite of most companies, where the higher the price goes and the higher the stock goes, the riskier it gets. The higher Bitcoin's price goes, the less risky it gets. Bitcoin is a union in cyberspace. It's a monetary union. It's a more perfect monetary union. The sooner you join, the better you are off. And as people join, it gets more powerful, and and the price goes up. So if you're Tesla, you want to be first, because Apple will pay twice as much, and then Google will pay twice that much, and eventually everybody's got to join, because if you don't join, you're going to lose 15% to 20% of your purchasing power. So ultimately, everybody's in this stampede to preserve their wealth or their purchasing power. And in this particular case, Bitcoin is the dominant answer. And as people start to realize that, it's just going to accelerate the transition and the adoption rate.